Welcome to XM.com for the Daily Market Comment by Marios Hadjikyriacos. I'm Christina Marujos. The U.S. services sector is starting to catch the cold that's been tormenting the manufacturing sector in recent months, according to the latest ISM data. The non-manufacturing index for September fell by more than expected to touch a three-year low. The mounting signs that the economy is losing momentum amplified concerns for a future recession, diverting funds into haven assets like the Japanese yen and gold. The dollar was broadly weaker as investors turned even more confident that the Fed will cut rates again this month. Stock markets fell initially but rebounded to close higher, as Fed stimulus hopes were enough to outweigh the negative mood. As for today, the main event will be the U.S. jobs report for September. Non-farm payrolls are expected to have risen by 145K, while the unemployment rate is seen steady at 3.7%. Likewise, wage growth is forecast at 3.2% in yearly terms, the same pace as previously. Digging beneath the surface, though, the risks surrounding these forecasts, especially the NFP one, may be tilted to the downside. The employment sub-indices of both the ISM PMIs fell further in September, with the manufacturing one sinking deeper in contractionary waters. The implication is that we are more likely to see a disappointment in these data than an upside surprise relative to the consensus. If so, that would argue for the latest retreat in the dollar to continue, as markets not only become certain that the Fed will cut in October, but also start to price in a greater probability for more action in December. Fed Chief Jay Powell will also speak at 6 o'clock GMT, and it will be interesting to see whether the latest slowdown in the data pulse is enough for him to hint that the Fed may need to step up its game to contain the weakness. This was today's Daily Market Comment at XM.com. Have a great weekend.